This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Hello, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have a very informative show for you today. He's a dear friend from years and years ago, one of the smartest guys I know. And his name is Richard Duncan. And he is hiding. He has socially distanced himself in Thailand, but he's been there for years. And he is an economist. He's a classically trained economist. He's worked for hedge funds and all this. And years ago, I was walking, 17 years ago, 2003, I was walking in Borders bookstore, who is gone. They're toast. And I saw this little book sitting on the table, and it said The Dollar Crisis. And it went, psst, psst, pick me up. It's a tiny little book. And I picked it up and I said, man, this guy Richard Duncan's a genius. And the reason I say that is, and Kim knows this, for so many years, I said, we have a dollar crisis. Ever since 1971, when President Nixon took the dollar off the gold standard, I knew something was really wrong. And it's here today. And a lot of people still don't know we have a crisis. I am shocked at that. So I was talking to Richard earlier, Kim, that at least the Bitcoin guys know there's a crisis. That's why they're in Bitcoin. But the old guys like me, like certain relatives, they have not a clue. They don't even know this. Why are you buying silver? Why are you buying gold? Why are you buying real estate? Why don't you just save your money like everybody else? So Richard Duncan's book was the first time I felt sane. So thank God there's somebody else who thinks like me. And the book is called The Dollar Crisis. It came out in 2003. And now it's just exploding all over the world. And Richard Duncan was correct. Any comments there, Kim?
Well, I always love having Richard on the show because he's an American, been living in Thailand all these years. So I'm always interested to get an outside U.S. perspective on the U.S. And there's so much going on in the U.S. I've heard so many different comments from people in Europe and Asia on the whole, what's happening with the pandemic and the new administration and all of this. So I'm fascinated to hear Richard's take on what's happening with all the printing of money that's going on. Are we having inflation, deflation? I'm looking forward to this conversation.
So, I want everybody to know, if you had bought Richard's book in 2003, you'd be a mega millionaire today. But not a lot of people, I hate to say this, many people my age have no idea what's going on. Zero. And we've made so much money just because we read that little book. So, Richard, welcome to the program. Well, thank you for writing The Dollar Crisis. And thank you for continuing your work with Macro Watch, is your way of watching the world via charts and graphs and, teaching the world what you see. Exactly as Kim says, you're American, but you sit in Thailand, and you can see how well-loved America is.
Well, Robert, thank you very much for having me back on the show. It's great to see you and Kim. It's always a pleasure to talk with you. So thank you very much for having me back on.
Yeah. Richard, how does it feel? You've been writing about this stuff for years. Dollar crisis, the corruption of capitalism. I've read your books. I'm going, holy mackerel, you could see it coming. So here it is today. We're now in March 2021. They're printing more money than I don't think in history. Maybe Zimbabwe printed more, or Venezuela. I don't know, or the Weimar Republic printed more relatively. But you were correct. This stuff is hitting us so hard. They're printing $120 billion a month in 2021. Is that what you're saying?
That's right. The Fed is creating $120 billion every month, and they are using that newly created money to buy bonds and pumping it into the markets. So it's been fascinating for me to watch. It's been going on more than 2 decades that I've been following this issue. And things have changed so much more radically than I could have ever imagined. At this point, just since 2007, the Fed has expanded the amount of money it's created by 8 times. since 2007, and the government debt in the United States has tripled since the crisis, since the end of 2007. And it's fascinating to watch because, of course, much of this is all new. No one had envisioned that it would happen like this. But now we have to pay attention to how much money is being created because it affects asset prices, the stock market, gold prices, all the other asset classes. And the other thing that we have to keep an eye on is all of this money printing and all of this government debt going to lead to high rates of inflation, because that could be very damaging to asset prices. So right now, there is this extraordinary battle going on in the financial markets. On the bullish side, there is so much new money being created and pumped into the financial markets every day that should drive the asset prices, stock prices, and gold prices higher. But on the other side, the bearish side, there are now worries that inflation is going to pick up. And if inflation picks up, then interest rates will move up. And if interest rates move up, then that's bad for the stock market, and particularly for the very, very expensive NASDAQ shares. And so we're really seeing an extraordinary battle now going on between these two camps. There's a liquidity tsunami, I call it, pouring into the markets. But on the other side, there are concerns that inflation is going up. And so interest rates have started going up. And fortunes are going to be made and lost depending on which side wins out.
And that's my concern, Richard. You know, we did a program yesterday for what we call Rich Dad's Coaching or Rich Dad's World. And, you know, Kim and I are getting richer than ever before. I mean, because it's asset price inflation and we're just creaming it. But the average guy's getting crushed right now. And that's why this friend of mine who I took to Argentina with me to have him explain what happens when the bank confiscates your US dollars and converts them to pesos. You know, because you got screwed. And the guy says, I couldn't run because my currency, my money was in pesos. I mean, he couldn't leave Argentina because his money was in pesos. And the same thing happened in Germany and the Weimar. This is a history of repeating. That's what happened in Zimbabwe. He couldn't run. And so this friend of mine's sister all he said to me was, that will never happen in America. And this guy still hasn't seen it. And that's what I'm saying. He's my age. They can't see it. They think, well, the stock market is going up. My house is going up in value. They can't see it. That's my concern, Richard.
And just to the point that this guy had $1 million US, and now he had 1 million pesos. Right? So a big difference. But also, Richard, you said, and I just want to make this point again, because we've said it before, the markets are at all-time highs only because the government is printing money, correct? They're buying bonds and putting it into the stock market. The stock market is not going up because of great run businesses and the fundamentals of business. Correct?
That's right. And the other side of that, in addition to the Fed creating money, of course, the government is borrowing a great deal of the money that the Fed creates and then sending out $1,400 checks to most Americans, many of whom are then taking that money and punting it through Robinhood into the most speculative stocks imaginable, causing more asset price inflation.
As they say, a fool in his money at one big party. Anyway, you know, it's the reason I love talking to Richard. Richard, give us a little bit of your background, because you are a classically trained economist, and I really want to plug your services called Macro Watch, because you put the economy in pictures, which I love, because I'm not a good reader, but I can look at pictures. And you tell the story of what's happening. And if people had listened to you, they'd be mega millionaires today, but they didn't buy your little book called The Dollar Crisis back in 2003. So what is your background, Richard?
Okay, so as you said, I'm an American. I was born in Kentucky. I went to Vanderbilt, and then through a great stroke of good luck, I got to backpack around the world for a year after college. And I saw Asia. I spent 2 months in Thailand and Malaysia and Singapore in early 1984, and it was already booming economically. So I realized there were enormous opportunities in Asia. And after 2 years back in business school in Boston at Babson College, I flew to Hong Kong and found a job in 1986, working for a local Hong Kong Chinese stockbroking company. Just as Asia was really taking off and the stock markets were roaring, it was just the perfect time for a 25-year-old to begin his career in the financial markets. And I lived in Hong Kong and Singapore and Thailand a few times each, and saw this extraordinary economic boom going on here. But then also I realized that something was going wrong, because it was not just a normal boom, it was blowing into an extraordinary bubble. And I started becoming quite bearish on the Thai stock market toward the end of 1993, but the bubble just kept getting bigger and bigger. It finally did blow up in 1997. And when it did, the Thai stock market fell 95% in dollar terms. And so that was where I had my education in bubblenomics. That's how I saw that credit growth creates these economic booms and bust. And I've been following these bubbles all around the world ever since. I worked after that in 98, 99, 2000, I worked at the World Bank in Washington for a couple of years. That was interesting to see what they knew and what they didn't know. And then I went back and worked in Asia again in the financial markets as an analyst, banking analyst, and on the buy side as well. And eventually I was in London as global head of investment strategy for ABN AMRO Asset Management, looking at all asset classes globally. And then from there, I went to work for a hedge fund in Singapore for a couple of years. And along the way, I've written 3 books, beginning with the one you mentioned, The Dollar Crisis. And I was very lucky to be able to start my career in Asia, because so many of the things that I saw in Asia then hit the US. And that was gave me a great deal of insight into how to anticipate the trends and the importance of credit growth in driving economic growth, and also the importance of liquidity in driving asset prices up.
Well, I think the best thing about your books, Richard, is that they're written for the layperson like me. Like I said, I was in Borders. I miss Borders. They were one of our better customers, but they're out of business, and same as all these other guys are going out of business due to Amazon. But anyway,
Well, I think all this is completely understandable to the lay person if it's explained in English. It doesn't have to be very, very complicated.
I understand that, but there's a thing called bias. They have an American bias. They said, well, this will never happen in America. And I took my friend down to Argentina 2-3 years ago, and he just could not see it. And to this day, he cannot see it. And I think it's because he doesn't want to see it. He says, well, you told me to buy silver. And the reason I told him to buy silver, it's not dollars. But no, he'd rather save dollars. And they're printing with how much? 120 billion a month? And he's hanging on to dollars. This guy is nuts. He must have a suicide wish or something. But anyway, Richard, I want to talk to you more about Asia and all that, because Kim and I were in Thailand when the Thai baht crashed, 96, 97. We still remember the rioting in the streets and all this stuff. And I remember being in Bangkok, and this guy wanted me to, there was an office building for sale for $4 million, and then I think it finally sold for $400,000. And I didn't buy it because I didn't know what to do with an office building in Bangkok. But anyway, I see it as great opportunities coming. But the average person with what they call a confirmation bias, or the USA bias, or we're America bias, can't see this bubble. I'm going, holy mackerel. And if they had read your book, The Dollar Crisis, or subscribed to Macro Watch, they might be rich today. But a lot of people don't want to see what's happening. So we come back, we're talking further to Richard Duncan. He is in Thailand. He's going to tell you what he sees with the great country of Japan, which has negative interest rates, and they're printing like crazy. China, everybody says, is the wonder child. We want to find out if it's really the wonder child, because they're right next to Richard in Thailand. He can't say anything bad because they might step on him. We're going to get a global macro view, and that's the name of his service called Macro Watch. He puts out charts, and hopefully you'll pay attention to what this man, Richard Duncan, says, an American living in Thailand. But if you listen to this podcast one more time, it's a very important podcast with Richard Duncan, and you talk and you have your friends, family, and business associates listen to it and discuss it, your intelligence will blow up. It'll just go mega. Maybe you'll see things that many people cannot see. So our guest today is Richard Duncan. He said back in 2003, I was walking through Borders bookstore and I saw this little book called The Dollar Crisis, and it's coming true today. And if you had read his book back in 2003, you might be a rich person today. Any comments, Kim?
Yes. Well, in the last segment, Richard, you made a really great comment. You said when you were in Washington, and it was interesting to see what people knew and what people didn't know. So today, as you're looking at this whole picture, do you think the Fed knows what they're doing? Do you think government knows what they're doing? Or is this a whole new world and they're just hoping and praying something doesn't blow up?
Well, I think they are they're trying honestly to do the best they can with the situation they have inherited. When the pandemic started, they had two prior cases they could follow. They could do what the government did when the Great Depression struck in 1930, which was very little, and the economy collapsed into a 10-year depression that didn't end until World War II started. And it only ended then because the government then radically expanded its spending on the war. That ended the depression, but of course 60 million people died. That was one path they could follow, not do anything. Or they could do what they did in 2007 when the economy, once again, the great bubble started to implode. And what they did in 2007 is they had very large government budget deficits to stimulate the economy by running up government debt. And the Fed created $3.5 trillion between 2008 and 2014 to help finance about a third of that new government debt. And that's the path they chose, because in 2007, that reflated the economy and it prevented a new Great Depression. So when the pandemic hit this time, they did the same thing they did in 2007. They've had enormous government budget deficits. The government last year increased its debt by about $5 trillion, somewhere between 20 and 25%. And the Fed has also created something like $3.5 trillion again, just over the last year. And
so Richard, let me ask this question.
That's about to set off a big economic boom in the United States. They expect the GDP, the economy, to grow by somewhere between 6, 7, even 8% this year.
I understand that, but I want to take advantage of the fact that you're sitting in Thailand right now, and then you're sitting between China and Japan and North Korea. And my question is, what's happening in Japan? Because they've been doing this 20 years before us. They started in 1990 printing all this money, negative interest rates. And you always talk about how that just blew the Japanese economy into a bubble. And then you have China on the other side. So what's happening in Japan and China?
Yeah, Japan's very big economic bubble developed in the 1970s and 1980s. I went there when I was just starting off my career, and it was incredible to see Japan in the late 1980s. There was just money everywhere in the streets. And the property prices were astronomical. The stock market was trading on a 100 times PE multiple. And as they say, the park around the Imperial Palace in Tokyo was said to be worth more than California. So this is extraordinary bubble.
It is today.
and then in 1990, that bubble popped. And in order to prevent a depression, year after year, the Japanese government has had these extraordinarily large government budget deficits. And the Bank of Japan has been creating enormous amounts of money. Since then, so the government debt in Japan has gone up from 60% of Japan's GDP up to now is 270% of GDP.
What's America's right now?
Well, my best, I looked just a few minutes ago, it seems to be something like 125% of GDP.
You're generous. Okay.
And so Japan has their debt to GDP is more than twice as high as ours are. In fact, they were where we are now in 1999. So that gives you some idea of how long this could potentially go on in America. We don't know when it's going to blow up in Japan. Japan hasn't had really any economic growth to speak of since 1990, but they're quite prosperous there. Because they developed so much before 1990, they still have a very high standard of living. And of course, it's difficult for Japan to grow because their population is shrinking. So they have managed to keep their bubble from collapsing into a Great Depression now for 30-something years. And that's where they are. They have very little GDP growth, but they're all still pretty rich.
Yeah, just everybody, FYI, just so you know, Jim Records is a friend of ours, says that this is a Rygaard Rogaine guy. They talk about when it passed 90% debt to GDP, there's no turning back. So if America is at 130% and Japan's at 250% approximately, we can't turn back. Would you kind of agree with that, Richard?
I agree. There's no turning back because we've moved from an economic system that was based on investment and savings. That was capitalism. We've moved from that system into a new economic system that I call creditism, because it's driven by credit creation and consumption. And now our economic system must have credit growth to prevent it from collapsing. If credit doesn't grow, then the economy collapses into a depression. So the government has to ensure that credit keeps expanding every year, one way or the other.
So the game is to grow credit, not grow production. I mean, we're not producing it nearly as much as we used to.
Well, that's the mistake they have made. They have grown credit without growing production. For a while, it was focused on growing credit by making house prices inflate and making the Americans richer by taking equity out of their homes. But it doesn't need to be that way. They could grow credit by the government borrowing the money and investing with the private sector in joint venture companies to invest in productive ventures in the industries of the future that would turbocharge economic growth and productivity. But they haven't done that yet, but they may be moving in that direction. That seems to be, we are beginning to shift into a new paradigm where the government does play a bigger role in things like not only stimulating the economy through the pandemic, but now building up infrastructure on a very large scale.
So Richard, what's going on in China and then India? Because you're right in that heartland. I'm sick and tired of the American corruption. I mean, you called it the corruption of capitalism. That's your book. It really is the corruption of capitalism. So what's going on? Because all the central banks are linked. You know, they operate out of the BIS, out of Zurich, the Bank of International Settlements, the Nazis' bank, and they're all related. So what's going on in China and what's going on in India right now around you? Because we don't.
So in China, when I got to Hong Kong in 1986, you can't believe how poor China was. It was shockingly poor. And now, when you go to Shanghai, it's incredible. It looks like the Emerald City and the Wizard of Oz. Everything, the subways, the airports, the skyscrapers. Well, we were there together not that many years ago, you know. And this came about because China benefited from following a strategy of export-led growth. They had cheap labor, and so all of the Americans moved their factories there and paid Chinese workers $10 a day. And China grew rich out of this. And China, as a totalitarian state, has complete control over government policy. And fortunately for them, they've had very wise totalitarian leaders, starting with Deng Xiaoping, who have been able to manage the economy with a very clear plan on how they intend to grow rich and become the strongest power in the world. And if current trends continue, they will become the strongest power in the world, economically, technologically, and militarily, sometime within the next 15 years. If they get to artificial intelligence, if they develop general artificial intelligence before the United States does, then it's game over. They will radically accelerate from there, and we will become a second-rate, vulnerable, has-been power. And this has worked because, first, they're totalitarian, they have complete control, but also because they've had a plan, an investment plan, a strategy on how to develop new industries and technologies, and it's been working fabulously for them. I've expected that, for years, for decades, in fact, I thought that China's economic bubble would blow up just the same way that Thailand's economic bubble did in 1997. But it hasn't. It still may, particularly now that there's such tension between the United States and China, and it spreads beyond just the United States. Of course, most of the United States allies have grown frightened of China's growing power.
So a question is, Richard, how did they evolve through this pandemic? I mean, America is damaged. You know, they shut down our small businesses. That's the engine. You know, small business has always been the engine of America. Silicon Valley got richer. People like Kim and I got extremely rich, but the engine of America was knocked out. They shut it down. So what happened in China?
In China, when the virus broke out, they came in with stormtroopers and effectively closed everything down so tightly around Wuhan that no one could leave their apartment building until they were tested and retested and retested. And anytime anybody came down with a case of COVID, they were quarantined immediately, and everyone around them was tested immediately, and they were all put into quarantine until they recovered or died. And so everyone was forced to wear a mask. If they didn't wear a mask, they were beaten and jailed. And so they got the crisis under control before it spread everywhere, and through very forceful totalitarian policies that were very effective. And so their economy crashed initially, but in the end, because they got everything under control so quickly, and because once they did get everything under control, their factories were still working. And so when Americans needed to buy ventilators or masks or everything else that America needs to buy, China's factories were able to produce those things.
Yeah, what we're told over here, Richard, what we're told here is because when Biden sends out his $1,400 stimulus check, China gets richer because they keep buying more products through Walmart and Costco and all that from China. Is that true or not true? I mean, what do you see?
China will definitely get richer as a result of this, but of course, the Americans also will benefit from this. It's not like all the money is going to go straight to China. But yes, undoubtedly, the U.S. trade deficit is going to become much larger, and China's trade surplus is going to become larger as a result of this.
And so quickly, I need to find out what's happening on the border of China, Pakistan, and India.
Well, we're beginning to move beyond my area of expertise, but for decades, China and India have been enemies or strategic rivals. They share a border in the Himalayas, and it's up in the mountains. It's not really good for anything that I'm aware of, but the border is disputed, and they fight from time to time. And recently, there have been some fights where some Chinese soldiers killed some Indian soldiers, I understand. And consequently, India now has become significantly more anti-China than before and has stopped buying as much from China as it did in the past. It's cracked down on some of China's technology companies selling their products in India, and has become even a closer ally with the United States.
Right. So Rich, we're kind of running out of time. I want to promote your thing called Macro Watch because I'm not a classically trained economist, but what I was taught at military school, it starts with currency wars, then it goes to trade war, and then we go to shooting war. And so that's why why your position on the Thai border, which is next to China, is crucial to understand. So, I appreciate what you're saying. So the question is, what does Macro Watch give the people of the world that you can see that nobody else can see? What does Macro Watch do?
So MacroWatch explains how the economy and the financial markets really work now, because classical economic theory no longer does.
Correct.
Classical economic theory was built on the cornerstone foundation of gold. Gold was money. But once gold ceased to be money in 1971, that cornerstone was pulled out from all of classical economic theory and it collapsed. So
Correct.
It's no longer capable of explaining the way the economy works now.
So that's why you call it creditism. It's
That's
debt.
right.
It's debt. You got to borrow for money to exist. That's what happened in 71.
The economy now is driven by credit growth. If credit doesn't grow, the economy will collapse into a depression. So the government manages the economy to ensure that credit does grow, and the Fed helps them do that. So MacroWatch is a video newsletter. Every 2 weeks, I upload a new video of me making a PowerPoint presentation discussing some important subject in the global economy. Right now, it's this tsunami of liquidity hitting the financial markets because of the Fed creating $120 billion a month on one side and inflation fears on the other side. So those are the videos I've been making over the last 6 weeks. So they're videos, they're roughly 15, 20 minutes long. They have 30 or 40 slides. When you see the charts, it becomes very clear what I'm talking about. This stuff is not rocket science. I make it very clear for people to understand. So
how much is this? How much is MacroWatch, Richard?
So MacroWatch, for an annual subscription, the cost is $500 a year. But for your listeners, I'd like to offer a 50% discount. So if they visit my website, which is richardduncaneconomics.com, that's richardduncaneconomics.com, hit the subscribe button, they'll be prompted to put in a coupon code. They can subscribe for $250 a year. And what they'll get is 2 new MacroWatch videos. They'll get 1 new video every 2 weeks, and they'll have immediate access to all of the videos in the MacroWatch archives, something like 75 hours of videos discussing every conceivable subject in macroeconomics. It's been going now for 7.5 years. And this includes 4 courses on things like how the economy really works, monetary policy, capitalism in crisis, and China's economy. So I hope your listeners will check out the website.
Just like I said, back in 2003, when I first came across your book, The Dollar Crisis, you were the first intelligent person I ran into, because all of these years I've been saying, you can't just keep doing this. Kim and I have seen many of the same things. I was in Vietnam in 72. I crossed the border in 78 into China. We're in Thailand when the Thai baht crashed. And I've been watching this crash, and I talk to my friends here, and they don't know. They think the economy is booming, and it is for the rich. But we're going into probably hyperinflation, which will wipe out the poor and the middle class. I mean, is that possible, Richard?
And can I just jump in here, because that's part of my question is when you said the U.S. will benefit as a result of this. I mean, I know they're going to put a lot more money into the markets, and that's going to keep things up. But the average person right now is in crisis. They've lost jobs, they've lost businesses.
Inflation.
I'm concerned where this country is going, because it seems like it's more and more government and less capitalism.
Well, so it is a concern. Of course, right now, nearly 10 million fewer Americans have jobs than 1 year ago. And that's why the government has felt it's so important to send out these large stimulus checks to support people so that they don't lose their homes and go hungry. And meanwhile, the Fed is saying at every opportunity that they are going to continue to pump money into the economy for as long as it takes until all of these 10 million Americans have jobs again. Because they believe that until all of these people are fully employed, they don't think there's going to be any significant inflation in the United States, because there's going to be a tick up in inflation pretty soon in April, because last year prices were falling. So when you compare last year with this year, remember last year oil was minus $40 a barrel. So of course, when you look at this year compared to last year, there will be inflation in April. Yep. But until commodity prices, there will be inflation. But until you get these people back to work, what really matters for inflation is wage price inflation. Until wages start going up, you don't get sustained inflation in a country. And wages aren't going to go up in the US until these 10 million people have their jobs again. Even when they had their jobs a year ago, the unemployment rate was at a 50-year low of 3.5%, and inflation was still very low. So even if all these 10 million people get their jobs back, it's still not certain there's going to be high rates of inflation, because we not only buy things from the Americans now, but we buy things from the entire world.
Right, Richard, we need to run, but I want to, look, I want to let you know inflation's already here in America. We live here. The price of gas just went up. Food's going up. And, Biden's trying to pump $15 minimum wage. That's going to cause more unemployment because you can't afford the worker. If you can't produce, can't beat the Chinese producer.
Plus corporate taxes, plus all of the taxes coming up.
And they're giving tax breaks to the rich. But anyway, which is good. The point here is this. I want everybody to subscribe to Macro Watch if you're really concerned. Excuse me. If you had bought Rich's book back in 2003, you might be rich today. Or you could be like my friend who says, that'll never happen in America. Richard, thank you for your contribution to the world, but also being a great friend of Rich Dad for all 17 years now. So thank you very much.
Thank you, Richard.
Robert, Kim, it's so great talking with you guys. I always enjoy it. Let's do it again soon.
Right. Again, Richard's website is Richard Duncan Economics. It's a special offer on Macro Watch. And please subscribe to it because your future counts on it. Otherwise, you're going to be like my friend who's still saying it'll never happen in America. Like I said, back in 2003, I was walking through Borders bookstore right next to our house in Phoenix here. And that little book has made me a fortune because he was one of the first people that validated my concerns. There is something wrong with the US dollar. And everybody goes, oh, you don't know what you're talking about. But the dollar crisis was that book. And then I strongly suggest you subscribe to Macro Watch for $250. You could become a multimillionaire because of it. And he's right on the border of northern Thailand and China and India and Japan. So he's out there. He is where the action is. It's not in the streets of Detroit or Portland, that communist city. But anyway, his website is Richard Duncan Economics. Final words, Kim?
Well, he's a good promoter of Thailand because he said you should come to Thailand because we don't really have a pandemic here and we don't have to listen to all this nonsense of what's going on in the U.S. I would say he's a little more optimistic than I am, especially on the U.S. I'm a little more concerned about what's happening on the ground and what's happening.
When you look a pessimist, your picture's in the dictionary now.
No, and I'm the eternal optimist. So if I'm being pessimistic, then I think we're in big trouble. The Mexico border, what's happening with, oh my goodness, with the pandemic and cities still not opening. It's like, oh, it's crazy. So yeah, I'm a little more on the side of.
What really concerns Kim and I is the freedom of speech. And I am very cautious of what I say on this program. I just walk on eggs in this thing. And when Silicon Valley takes away my freedom of speech, I get a little concerned here. So that's why we're careful what we say. So that's why subscribe to Richard Duncan's Macro Watch and you'll get a better picture of the world.
Yeah, because we're very pro-Constitution. We're very pro-free markets. And I'm concerned that that's all deteriorating. That's my biggest concern. Yep,
it's been stolen. So anyway, thank you all for listening to Rich Dad Radio. And like I said, in 2003, I read The Dollar Crisis and it reconfirmed my fears. I said the dollar is a corrupt currency. So that's why I started buying silver, gold, and now Bitcoin and real estate. And I use debt. And the tax breaks are immense for the rich. So thank you for listening to Rich Dad Radio.